Is the economy doing well or is it in shambles? Well, if you look at some data, it shows you one thing. And if you look at the other, it's a completely different picture. Are we in a recession? Some say yes. Others say absolutely not. You look at the stock market, it tells a different story. All of these give mixed messages. And you see all the YouTubers out there, they pick one side, they show you one piece of data, and they blindfold you from understanding the rest. On this video and in the other videos that I do, I give you a full perspective and then you make that decision for yourself. I'm not here to spoon feed you. I'm not your mommy. I'm not your daddy. And I can't do that for you, okay? You don't wear a bib. You're not that anymore. I'm giving you the knowledge. I'm giving you the actual data directly from the source. You can look into the description to get all those sources. And then you make those decisions best for yourself, your family, your retirement account, and so on. In this video, we're going to talk about some things people don't want to touch on, including what's happening in California. It's unlike anything we've seen before. Let me show you. First things first, we're talking about cars. In this case here, new cars. Once a part of the American dream, now out of reach for many. Now this is a car, it's a vehicle. If you remember just recently, I did a video about California, just north of San Francisco, a 2-mile stretch of vehicles, RVs and different types of vehicles where people are essentially just lining up and now they live on the side of the road in their vehicle. This shows us that there has been an increased pressure on expenses, and San Francisco being one of those extreme places. And you will see that popping up all over the place. Tent cities are becoming more popular. You're seeing what happens when an economy goes down, prices go up, and the general well-being of the public declines substantially. There's more to this. Okay, I had covered what we had said with the cars. Of course, prices of new cars and used cars are just too high. That's inflation right there. There's some odd things going on, some odd circumstances for sure, but it connects with this. Recession is a done deal. A renowned market bear who called the dot-com bubble warns deep and long downturn will destroy corporate profit margins, setting stocks up for disaster. Now, this is Societe Generale's Albert Edwards, and he said it's already underway. But what I need to point out is corporate profits. That's the key. If you look at corporate profits, and of course, when inflation goes up, expenses go up, the employees demand more money, like all these different things start to pile on, that hits profits. And you could see that companies are laying people off. The easiest thing that you can do as a corporation is simply lay people off. Okay, we're having problems, you're gone. 1,000 people there, 10,000 people here, and it makes the shareholders happy. That's why the stocks can continue to go up. People don't make that connection sometimes. They're like, yeah, everything's fine, the stock's doing well. You got to understand that when they lay people off, that's good potentially for the stock, not for the stock market in general, by the way. It's good for that stock, but it's not good for the economy, because if that employee, former, let's say Facebook employee, doesn't have a job, he's not going to that, all those things in that area. He's not driving back and forth. He's just sitting at home twiddling his thumbs. And so during this period of time, you see if it continues that you do have basically a downfall that occurs, and depending how many people get laid off and the sectors that are affected, it's going to have a different impact. It's going to be more serious in some cases. Right now, many are saying mild recession. What do you think? Mild recession? Or do we go tumble further and further down? And by the way, of course, as we'll talk about in a minute, is at the end of a cycle. Are we going to experience rate cuts? You see, we tumble down and then the response from central banks is to cut rates. That's really what I pulled this chart up for. You could see the different numbers in the United States, year over year inflation from March 22 to 23, that has declined, growth in labor costs. Look at all these different things. And, overall, I would say it's not strong. It's not like the strongest it's ever been, but you could point to a few stats and say, look, it's not really a recession. And in some cases, it's, a little bit weak in manufacturing and so on. It's just weaker than where it was. Services, different factors that show us that, and I've given you these before, but of course, it doesn't tell us the full story. If I look at manufacturing, by the way, only from one source, I'm going to get one number. What about global manufacturing? Because maybe that manufacturing has shifted, right? What if suddenly after 2020, a lot of these companies said, I'm not doing business here anymore. You're shutting me down. You're doing lockdowns, restrictions. I can't do it. I'm going to move to this country over here where I can get cheaper labor. We don't have to pay the same healthcare costs. And maybe, just maybe, we could stay open. So that's kind of what we're experiencing. A big shift happened after 2020, and for some businesses, it's never going to be the same again. Look at, for instance, the movie theater business. While yes, people will go to see the movies, it's going to be a lot of Adam Sandler low-budget flicks that you're going to be seeing, all right? California. I know a lot of people, obviously, California, very diverse place in many ways. And you look at what they experience, look, they've got a massive, their GDP in California is massive. They've got agriculture. They've got everyone's favorite, Hollywood. They bring in a lot of money. They employ a lot of people. Population is big. Like, there's so many different things. Yet at the same time, you have grand disparities. Look at the people suffering in California. Look at the policies that they're putting in place. And now California defaults on $18.6 billion of debt. Now businesses have to pay. So this is just one example of what's going on. California borrowed approximately $20 billion from the federal government to cover unemployment benefits during 2020. Now saying, well, we can't pay it back. Like, what are we supposed to say about that? Prices for canned tomato goods could rise as California farms stay soggy after record rain. So when California hurts, everybody hurts because they're constantly exporting. Canada is feeling it when California can't export. That's where they're getting their produce. Where are they getting it from in the wintertime and the fall, spring? They're getting that from California. They're getting it from Mexico as well. $55,000 to leave a rent-controlled apartment while these tenants are saying no thanks. And they give an example over here, just these people basically saying, I can't afford to live anywhere else. I'm living here. Rent-controlled environments, good for the tenant, terrible for the landlord. And then what happens, unfortunately, sometimes they become slums because the landlord's saying, well, screw you. If you're not going to move out, I'm not going to take care of the place. And it's a battle, and it's unfortunate the way that things have been working. This is talking about California as well. The prices of everything basically increasing considerably. This is specifically about cannabis, but what they're saying is, you can read the quote, I used to pay trimmers $300 to manicure each pound, and now I can't even sell them for that. This was a business that benefited families all over the mountains here, and now there are growers and their helpers looking for work. Nobody knows what to do. So there's a lot of different things. Inflation is a factor here, growing conditions, like everything all at once, perfect storm. It hit California where it hurts. And so really what I want to highlight is that nothing is ever going to be just black and white. We're always going to see those shades of gray. Not 50 shades of gray, okay? But it's going to be some level of, give and take. Is it going to be inflation or is it going to be deflation? And you see these people that say, deflation's going to happen. But look, let's be honest. Do you see any deflation today? Sometimes, yeah, I look around, I see deflation, but not in the balance sheet, that's for sure. Barely any. Do you know what the Federal Reserve has historically done every time there's a crisis? They go in, they pump cash. And so you as the individual, you got to look at this and say, which direction are they likely headed? And how do I prepare for that? So if you have some funds, you got to look at your portfolio. You got to look at your retirement account. And let's be honest. Let's be honest about it. Is this where I need to keep my money, considering the fact that we might enter a level of higher inflation? What do? Do you want to own Tesla? Do you want to own whatever the hot stock is? I always say Tesla because it's sort of a fan favorite for so many retail traders. Or do you want to own staples, things that people need, like a Warren Buffett type of stock? What do you want? Well, that's up to you, of course. If you don't have much cash and you're saying, well, I don't do that. I don't do stocks. I don't have enough money. I don't have a retirement account and so on. You better learn about the pillars of prosperity. Do you know about that? I mentioned it several times, and so many people, they just click off. You don't realize how important that is. It is the two pillars. Number one is all about increasing your income. I teach how to do that. Number two is about self-sufficiency and just trying to be prepared. Okay, so if you click on this link right here, Pillars of Prosperity, or you can search Pillars of Prosperity, the Money GPS. I'll see you right there.